Hello and welcome back to my YouTube channel. My name is Ratisel Ferovs and I'm part-time trader and investor, and you're here at Farewell Total Return Investing. In this video, we will be going over a phenomenon which is currently manifesting itself inside the marketplace, and I'm going to teach you how you can spot a long-term reversal inside the marketplace by utilizing the open interest. Leave a like and subscribe to help our channel grow. And with that said, I would say let's get going and jump into the charts. So first, let's look at the DXY chart, and as you can see, the last two trading months we have been declining, and we traded down into a monthly rejection block delineated by these candle bodies. We took out the liquidity below this monthly rejection block, and now we're seeing a bullish impulsive move at the beginning of the January trading month of the new year. And also, with that said, we also traded into a monthly fair value gap, which is a busy. We already have reacted a few times away from it right here, 1, 2, 3, and we're reacting the fourth time out of this monthly fair value gap, excuse me. So let's remove this, and the fact that we're consolidating inside this bigger range has to do with the fact that we are inside the equilibrium price point of this larger price swing. The equilibrium price point delineates 50% of the current trading range, and price tends to consolidate around this area. If we drop into a weekly chart, I'm going to show you how it perfectly trades around this level. It acts like a magnet for price. But as you can see, we still have a open monthly fair value gap right here, a SIBI, and also coupled with a monthly inversion fair value gap right here. You can extend this through and you will get the inversion fair value gap. So what we can anticipate a reaction away from the equilibrium price point after we traded into the monthly rejection block and into the monthly fair value gap. We could see and revisit the monthly fair value gap again. Now let's drop into the weekly time frame. As you can see, here's the equilibrium price point delineated by this dotted blue line right here, and look how we are trading around it. Here it was support. Again, we saw a reaction below from it away, then we traded through, traded up again, and now we're seeing some sort of bullish reaction away from it again. The problem right now, we have been bearish. We anticipated a bearish week. Now it's already the end of the day. It's Tuesday and the end of the trading day. And as you can see, market just traded higher the last two trading days. It gapped up. We're going to get into the daily chart in a few minutes, but let me quickly go over the weekly chart. So what we can see, we have taken out the swing high right here, delineated with this red dot. We have the weekly order block. We are anticipating some reaction. If this level doesn't hold true, then we are probably gonna revisit the weekly fair value gap, the SIBI right here, which is unfilled. It's also coupled with a monthly fair value gap we just showed you a few minutes ago. So perfect confluence right here. And now if we go into the daily chart, you can see we have the monthly rejection block from the monthly time frame, traded below it, and saw a market structure shift right here. What you also can see on the daily time frame are these equal highs, which we can target. For now, first target for the week is our daily fair value gap, SIBI high. We want to see this fair value gap filled in, and then if we can stay above this SIBI high, we can also target the buy side liquidity right here, the equal highs. Very clean level. It's also coupled again with the weekly fair value gap and the monthly fair value gap. So a lot of levels are lining up. As you can see, we had a nice reaction from this daily fair value gap, rallied away, and today we even opened up with a daily opening gap right here. And you're probably asking yourself how you can anticipate such a long-term reversal inside the marketplace like it happened right here? Why didn't it continue just lower? Why did we reverse right here? This is the topic of today's teaching, and I'm going to show you how you can anticipate these long-term reversals by utilizing the open interest. You can go on barchart.com right here. I have the dollar index pulled up. You can select the commodity right here. Go to, let me find it. It's right here. Under currencies, US dollar index. Then you go to the current contract. Right now we're trading the March contract. Always use the contract which has the highest open interest. Click on that. Click on full chart. You don't need any subscription right here to use this. I don't have any either, so it's totally free to use. And then you can click to pop the chart out on another window. Of course, you have some advertisements. And right here, you can also apply a study tool. You need to search for open interest. Click on that, and then you will have something like this. You have the open interest. You can choose the thickness of the line, the color, and everything, but I just leave it on default, doesn't matter. But as you can see, the open interest has rapidly declined a few weeks ago, and it declined by 50%. And after that, 7 days after that, we saw the low formed inside the marketplace. Why is that so? If prices are in a downtrend and open interest is falling, this is a bullish sign, because smart money, the shorts, are covering or liquidating profitable shorts. They then will be replaced by new shorts not as strong as they were, but declining open interest indicates the squeezed longs are bailing. They will be replaced by new longs who were not as weakened by the lower prices. And you can see this phenomenon repeating again and again. You can see right here, open interest declined rapidly. Let's measure this out. Right here, it declined by 20%. 20% is already a significant decline. And then 15 days after that, we formed a new high. Inside a bullish market, declining open interest is a bearish sign. And in a bearish market, right, which we have right here, when open interest is declining inside a bearish market, this is a bullish sign, and vice versa, as explained for the bullish market. And as you can see, 15 days after, we formed a long-term high and then rallied lower. And you can backtest this for yourself. If you don't believe me, just go and backtest this for yourself inside the charts. And please, if open interest is just declining by itself, it doesn't have to mean anything. You always have to view it in a context. We already explained to you that the narrative can be also supported by looking at the monthly chart. We traded away from this rejection block. We are inside a monthly fair value gap, and we're inside the equilibrium price point, and we can revisit this open monthly fair value gap. So now let's look at the Euro USD. Same thing goes there. We can start off by the weekly chart, monthly chart, nothing significant. Also equilibrium price point right here. As you can see, we're trading around this level. We had a divergence with GBP USD. As you can see, GBP USD made a higher low while Euro USD made a lower low. So preferably you should trade the GBP USD for longs because it's the leader. Euro USD had to come below this low to accumulate new longs before going higher. But for now, this is irrelevant because we're looking for the downside scenario. If dollar is bullish, we're looking for lower prices on Euro USD. On Euro USD, we have this monthly fair value gap, the BISI right here. We also traded up into the rejection blocks and are rejecting them. As you can see right here, we also filled the remaining fair value gap right here, filled it perfectly and traded lower. our last line of defense is this weekly order block. We have also the 50% of it. Just look how it reacts if it trades down there. Then on the daily time frame, as you can see, perfect delivery from the daily fair value gap, and now we're looking for a run into the daily fair value gap BC low. We want to see a closure of this fair value gap right here. This would be the target for tomorrow. We could look for a nice move. It would be, let's see how much pips, like about 50 pips. Let's see if we can catch a move tomorrow. If this really should put in a long-term swing high inside the marketplace, then we could look for lower prices until these relative equal lows, which would equate to 360 pips of downside potential. I'm going to show you the open interest for the Euro futures right here as well. We can see the same phenomenon repeating here as well. So as you can see, we had a decline in open interest of about 19% right here. And after that, 10 days later, we put in the swing high of the current market. Same thing here. As I said, in a bearish market, when open interest is declining rapidly, this is the key point right here. It has to decline rapidly. Again, we saw right here a 16-17% decline in open interest. Let me put this back. So 16-17% decline. And as you can see, 15 days after that, after the sharp decline right here, we put in the swing low inside the marketplace. Because inside a bearish downtrend, when open interest is declining, it's a bullish sign. And when the market is bullish and open interest is declining rapidly, then it's a bearish sign. I hope you got that. Hopefully, I explained it as well as I could, and hopefully you can apply it into your analysis if you want to, if it was helpful to you. So to sum it up, we're looking for lower prices on EURUSD and for higher prices on the DXY. I hope you found this video insightful. If yes, leave a thumbs up, like the video, subscribe so you don't miss out on any future new videos. And I would say we will see us in the next one. Stay safe, trade safe. Bye. I'm out.